Thank you everyone for joining us for today's webinar, which is Understanding Your Credit and Credit Scores. Our presenters are Jessie Kellerman with the University of Maryland Extension and Mariah Papitas with University of Delaware Extension. I'm Taylor Robinson, and I will be helping to facilitate this session. We will be using the chat pod located at the bottom right-hand corner throughout this presentation for questions. Please use the arrow key to select everyone or all participants and type your question in. We will also be answering questions at the end of this presentation. Before we begin, I would like to say thank you to our sponsors and collaborators listed here on the slide. The blue link listed, which is extension.umd.edu/womenandag, is where you can find the complete list of upcoming and previously recorded webinars, as well as additional resources. As a reminder, we will be recording this presentation, and you will receive an email with the recording and PowerPoint slides. At this time, I would like to turn the presentation over to Jessie with the University of Maryland Extension, and we're happy to have him here today.
Thank you, Shannon. Again, my name is Jessie Kellerman, and I am a family consumer science educator in Western Maryland. And I'm going to be talking today about understanding credit and credit scores. And I'll let Maria give a brief introduction of herself before we move forward.
So good morning, or afternoon, actually, everyone. My name is Maria Papitas. I work for the University of Delaware Cooperative Extension. I'm also a family and consumer science educator with a background in personal finance and an accredited financial counselor. I'm really pleased to be here with you today.
So today, our objectives will be to develop an understanding of credit and credit reports. I want you to learn how to obtain a copy of your credit report and learn the process of correcting mistakes on your credit report. And then we'll also discuss some steps that you can take to improve your credit score. But before we get started, we would like you to complete a short survey for us. So I just posted in the chat box a link. If you could open that link. On the first page, you'll see today's date, and it'll ask for the educator. You can just put my name there. And then on the drop-down menu for location, there should be webinar. And then it'll take you, the bottom right has an arrow. You click on that arrow, and that'll take you to a couple of traffic questions. And then the third block will ask you the two questions that you see on the screen. I have the confidence to use and manage credit responsibly, and I have the confidence to improve my credit score. You can click the arrow again, and then after that, I want you to minimize the box because the post evaluation questions will be on the next screen when you hit the arrow. So if you could complete those 3 steps for me and then minimize your screen, we'll come back to that at the end of the presentation. And I'll give you a minute to do that before we move forward. Like I said, the link is available in the chat box there. I know if you had to type that long link there, it might take a little while. So. Okay, so I assume everyone had enough time there, and if not, I'm sure you'll keep up. So the first question I pose is, what is credit? And credit is the ability of an individual to obtain goods or services before payment based on the trust that the payment will be made in the future. So, you know, it's that concept of, I'm going to let you do something, right? In this case, you know, the credit card, I'm going to let you charge something with the assumption that you're going to pay that back at another point in time. So I just mentioned a couple of the advantages of credit. If you wanted to, in your chat box, you could type in and click host and presenter or all participants if you have an all participants tab. And you can just discuss what a couple of the advantages are of credit. So how do you use credit? Another way to frame that question. like I said, you can go to the chat box on the right-hand side of the screen under 2. You can click host and presenters or all attendees if you have that option. I'm not sure what options you may have on your screen. Once we get 2 or 3 answers, we'll share them with everyone. What are the advantages? I mentioned the advantage of a credit card, right? It'll let you purchase something in advance with the assumption that you're going to pay for it later. What are some of the advantages of credit? So someone just mentioned that another example would be a mortgage on a house or a mortgage on a farm where you're able to purchase something, and in return you have to pay the bank back for that purchase. So that's a good example there. So that takes us to the next question: is what is a credit report? And a credit report is just simply a snapshot or a picture of how you borrowed and repaid debt. And again, that's for a period of time, right? So if you obtained your credit report today, it may show and indicate one thing, but if you obtain it a year from now, it may show something completely different. And so that's why it's just a record or a snapshot at a given point in time. And then what is a credit score? A credit score is a numerical representation of your credit worthiness. And so they came up with a mathematical statistical calculation to figure out how likely you are to repay your debt. And that is just a number generated through a mathematical equation. And we're going to talk a little bit more about the range of those scores. And those scores can vary. I mean, you're going to hear the FICO and you're going to hear Vantage, but there are several different types of FICO scores. So at that point, it's just, again, the credit score is just a numerical representation of your credit worthiness. So when it comes to credit, there's a couple different types of credit. So you have revolving credit, installment credit, and open balance paid in full. And so we have 3 pictures on the screen there. Revolving credit would be your credit card. You have those varying payments. So depending upon what you used, that would be your payment. You have your fixed payments, which the 2 best examples of that would be your mortgage payment or your car payment. And so you're paying that same amount over a fixed period of time. And then the example we have there of open credit, balance paid in full, is that open credit would be like your electric bill, right? So they give you the electric in advance, you get to use that service in advance, you get the bill at the end of the month, and you pay that bill. The other important piece of that over on the left, it mentions secured versus unsecured. So secured credit is credit that has an asset tied to it. The house, again, is a good example of that, where if you stop making payments on your house, it is secured. Somebody's going to take your house. Same with the car. If you stop making payments on your car could be repossessed. An example of unsecured credit would be like your electric bill, right? If you don't pay your electric bill, nothing really happens. I guess they push off your electric, but they're not taking your asset from you in the process. The same with your credit card. In most cases, with the credit card, if you charge your washing machine on the credit card, no one comes later on to take your washing machine. So that's the difference between secured and unsecured credit.
So,
Go ahead.
So having a credit score is certainly an important thing to be thinking about. And a credit score, as Jessie said, is sort of a numerical representation of your use of credit. And so how you use credit impacts whether or not you have a positive credit reputation, which means also a higher credit score, or if you have a negative credit reputation, and that may be a lower credit score. And so you see on this screen sort of this continuum, right, from positive credit score to positive credit reputation to negative credit reputation. So the advantage of having a positive credit reputation is really when you go to look for credit, you have the opportunity to shop around. You will be offered lower interest rates. You will have more options in terms of who you may choose to finance the purchase with. And because interest rates are lower, it can save you money. And depending on how excellent your score is, you might even be able to negotiate down the cost of, say, an application fee, right? On the negative side, right, it's sort of the opposite. You have higher interest rates, and then you have lack of options. There are less credit grantors willing to work with you. You'll end up spending more money because you'll be paying higher interest. And then in some cases, you may even be turned away from credit opportunities. And so some of the negative places might be things like a predatory lender or a pawn shop or a payday loan. Those would be, unfortunately, those options that you might go to when you're negative, when you have a negative credit reputation. Okay, next now. Okay, Jessie's helping me with the slides here. So this is an example of how kind of a difference between a positive and a negative credit reputation might be, right? So someone is interested in buying a car. It's going to cost $8,000. They want a 4-year or 48-month loan. Someone with an excellent credit reputation may be able to get a loan for 6% with a monthly payment of $188. The total interest paid would be $1,018 on that $8,000 loan. And so then the total paid would be that $9,018. Someone with a just an okay credit report or a low credit report score or a negative reputation may be offered a loan for 15%. And so you can see a huge difference then in terms of what the monthly payment may be. The total interest paid is almost another $1,600, and then the overall cost of the loan is almost another $2,600, with the total being paid of $10,687. So your reputation really makes a big difference. Okay, next. So one of the things that is really important to pay attention to, not only for your credit reputation, but also for your own kind of financial well-being and stress levels. There's lots of people who are stressed out about money. And one of the things that we really look at, and some of the research is telling us that, so look at the box right on the right-hand side of your screen. It kind of tells us that when people, if you think about your total income as a pie, when your total income, when 10% or less of that pie, I'll just say, and your total income is used for credit, you're kind of within a safe limit, and you're feeling very little debt pressure, and so you're feeling good about kind of managing your money and the percent of debt that you have compared to your overall income. Once you start moving up that percentage, right, 11 to 15%, for some families that's going to be a very safe limit, and they may feel some pressure or may not, depending on the size of their income. As you start moving up, right, 16 to 20%, you may be fully extended, and you're hoping that no emergency arises. And so you might need to be thinking about not taking on more debt. And 21 to 25%, you're definitely overextended, and that you're beginning to worry about debts, and you shouldn't be taking on any more. Now, I have to say these percentages are not based on mortgage, right? It's just based on all other consumer debt. And so as you get into that 26%, then you're really feeling stressed and could be in trouble, right? And are sort of living paycheck to paycheck and maybe even really behind in terms of paying off the debts. So how do you determine that percentage, right? So on the left-hand side of your screen is this thing called a consumer debt ratio. And you're looking at consumer debts, right? And you're dividing that by your take-home pay. And as I said, we're not including mortgage debt. It's really everything else. So it could be credit cards and car payments and student loans, you know, a boat payment, things having to do, you know, paying off that washing machine that Jessie mentioned earlier, right? So it's everything else. So what you're doing is you're adding up all of those types of consumer debt that you might have, not including mortgage. And so that would be the consumer debt payments or total consumer debt payments, and then dividing it by your take-home pay. Okay, so in this example, we have $200 in credit cards, $190 in car payment. We add those two together, we get $390. So we're now here down on the bottom of our screen, and we're dividing it by this $1,800, which is the take-home pay in our example. And so you see in this example, with just that a little bit amount of debt, they're in the 21%. And so they're really in a place where they're right on the line in terms of being overextended and are worrying about how they're going to cover their bills. Obviously, the smaller the amount of income, the smaller amount of debt you should be carrying, but it also typically means that the percentage that you're paying on mortgage or rent is going to be higher. It's going to be a bigger piece of your pie. And so the type of debt and the amount of debt that you carry really needs to be minimal because you don't have a lot of spending flexibility. Okay, Jessie? So ways that you can really damage your credit and that credit reputation and ultimately your credit score are things that are listed here. Filing bankruptcy, missing payments or paying late, owing lots of money, and that may be to one credit card, for example, or to many credit cards, or to multiple lenders. And then irresponsibly using credit cards, meaning going over the limit a lot, not paying on time, you know, maxing one out and then opening a new one and maxing that one out. Those would all be considered examples of irresponsible credit card use. Okay, Jessie. So one of the most important things to do is to check your credit report. And I guess in the box, if you don't mind, just tell us whether or not you've ever checked for your credit report before. And again, be sure you're sending it to everybody so we can kind of just share how you guys are doing on this in this respect. So in the chat box, just say, yes, I've checked it, or no, I've never done it. So while you're doing that, I'm just going to keep rolling here because I think one of the really important things to know is there was a study, and it's a little bit of an older study, but it's a study, and it basically says 80% of all credit reports contain errors. I'm going to say that again. 80% of all credit reports contain errors, and yet 57% or so of Americans haven't looked at their credit report. So it's really important to take a look at your credit report and make sure that there are no errors. So we can actually do this annually at no charge, and there is a place where you can do this either by calling a phone number or going on the internet. And the official website is this one, the one that you see online on our slide here, called annualcreditreport.com. There are many others out there, and there used to be this fun, jingly type of advertisement about checking your credit report. Well, this is the one that's truly free. And so this is the one that you want to go to. And so you can actually check them online, or you can connect with each of the credit bureaus and have them send it to you. So one of the things that you should know is married couples should order individual credit reports in their own names, because what's on one credit report may not be on the other. And one of the things to know is, credit reports kind of compete against each other. And so one credit report company may not have the same information as a different credit report company. And you see here on the slide, here are the big three, right? Equifax, TransUnion, and Experian. And so each of these guys is competing for your information. And so what Equifax may have about you may be different than what TransUnion or Experian does. So it's important to check all three reports for their accuracy. One of the things that is important to know is that if you have been denied credit, meaning you have applied for credit, but it was denied, or you didn't get the loan, or whatever, is you can, because of that transaction, you can get a free copy of a credit report. Now the key is here, you have to find out from the lender which credit bureau, Experian, TransUnion, or Equifax, they used for that report to look at your report. And then you can use that information to contact them and say, hey, I was denied, I'd like a copy of my report. So once you get your credit report, you want to check it for accuracy, and then once you've checked it, it's important to go back and check it again. It's also a great way to find any errors or to prevent identity theft, right? By going in and looking at it at least once a year, you're helping to reduce the chances of someone else using your credit in their name. So once is not enough. And the way I kind of suggest is the first time, if you've never done this before, is to get all three at once and look at them all at once, and then if you find errors, then you're going to contact each of those reporting companies and ask for them to update it and correct any misinformation or investigate any errors. And then once you're done, you've done that the first time, then you can kind of space them out over time, say the next year, maybe every 3 months or 4 months, get a different report, and then that way you can kind of keep an eye on all of them over a year's time. So, okay, Jessie, go to the next slide here.
So we did have a question there, Maria.
Oh, I'm sorry. Okay.
If you use the report, will it run a check on all three of those companies, or do you have to ask from each one?
Oh, and you wisely answered, you have to request it from each one individually. So I personally have done this, of course, because I, teach this stuff. And I have used this website. And one of the interesting things is like, say you click on Equifax, and you're going to go to the Equifax webpage, and it's going to ask you some questions based on the information in your credit report to be sure that it's you that's accessing the report. And so you kind of have to be prepared, because it's going to ask questions like, did you live at XYZ address? Or do you have, pick which company you have an account with. And sometimes they can be a little tricky. And I have to say, I have failed a couple times because it was based on information from like 15 years ago. And I just honestly didn't remember. So just so you know, once you do go and do Equifaxes, you can immediately get your report and download it to your computer or print it out or ask them to send it to you. And then you would log out of Equifax, and then you would come back to this page and click on TransUnion, and you do the whole thing over again. So I hope that clears it up a little bit.
And they do ask information because it's a little uncomfortable because they do also ask for your social security number and your birth date. And so you're giving away information that, you're told you don't ever give it away, but that's the only way they have to verify that it is you. So when you do this, you also want to make sure that you're on a computer doesn't have public access or anything like that, that your security protections are up to date and so forth.
Great point. Thank you, Jesse.
And the other thing I would add, they have you click on your state because states have different laws too. So like in Maryland, you can request 2 copies of your credit report a year from each of those 3 companies. So I think that's probably why it starts with asking what state you're in, and then moving into which of the credit reports you want to see.
All right. So here's a little bit about credit bureaus. And I kind of mentioned some of this already, but basically credit bureaus, they compete against each other to collect information from public records and companies that you do business with. So for example, say I have a Macy's charge card. Macy's, as I use my card, right, Macy's is sending information to the credit bureau. But then let's say Macy's wants to solicit new customers for a Macy's credit card. Well, they're going to go to the credit bureau and they might say, hey, credit bureau, please tell me who lives in these zip codes, who makes income around this amount, and has, a credit score of, X number and above. Send me that mailing list, right? And then the credit bureau sends them that mailing list, and then guess what? We get something in the mail from Macy's. And of course, the credit bureau is selling that list to Macy's. So it's a two-way street between what the information that a lender is sending to the credit bureau and what the credit bureau is kind of selling out there into the public or lending institutions. It's not, they don't sell it to the public. So they have to be a credible lending company. And so they're using that information to create your personal credit report, and the credit report is comprised of 4 sections. So before we talk about each of those sections, Jesse's going to click the slide and we're going to show you a little video. So quickly, let's just go over what are the different sections of a credit report. And so you can see that there's going to be personal information like our name, address, social security number, our birthplace. And if you've moved around a lot, there may be there might be a history, right, of where you've lived. Next. Okay, then there'll be your credit history. And so this is going to include all of your different open and closed credit accounts. And so in this case, open means open that you're using them, versus closed might be something that you had in the past and you're no longer using that account. So for example, if you've paid off your car loan or if you have closed a credit card account. And then it shows kind of the information about that. So it might tell you, it'll tell you the account name, it'll tell you who the credit lender is, the account number, the balance. It'll tell you if there was a maximum, right? If there's a credit limit. It will tell you the kind of credit it is. As Jessie explained, is it a credit card or a secured loan, a mortgage, or a car loan or student loan? It'll tell you when you first opened the account. It'll tell you if you've closed the account, when the account was closed. It will tell you what the highest balance was, right? So in this case, it's a credit card. The example in the gray box is a credit card. It's open. The recent balance was $273. The highest balance was $14,000. The current monthly payment is $10. And then you can see along the bottom this illustration of the account history. And it's usually 2 years worth of information. And when it says okay and green, that means that person paid on time at least the minimum amount required. And when it's yellow, and you see it says 30 in that yellow or orange box, it's telling us that, gosh, they missed their payment and they're 30 days late. So if you have a couple of those in succession, then obviously there'll be a couple of 30-day late notices until it finally gets to like 90 days. And so there's a question in the box: how many years of past credit history is retained on these reports? So that's a really great question. And there's sort of multiple answers, right? So a credit report typically has 7 to 10 years worth of information, especially the bad information. But the good information can stay on for quite a long time. And I'm going to let Jessie talk more about that as we go along. So there's the short answer, and I'll let him talk about it a little bit later. And so we're going to go to the next slide. And so one of the other things that is included on a report is any public records really having to do with finances and lending, right? And so if there is property liens, if there are bankruptcies, if you've been taken to court because you haven't paid, those kinds of things would be included in public records. It doesn't include things like, oh, I got a divorce, right? Which can certainly impact a credit score and a credit report. And so that's one of the things that isn't included and shouldn't be impacting your credit score. Okay, next slide. And so then there's these things called inquiries. And so inquiries last a couple years. And a hard inquiry is one that you initiated by filling out a credit application. So let's say you go car shopping and you're going from dealer to dealer, right? So you don't necessarily fill out a credit application when you go to the dealer, but that dealer is running your credit report. So that can be a hard inquiry. If you go in and fill out a credit card application because, I don't know, Fashion Buggas or Dress Barn is having a sale. And they say, oh, fill out this application and we'll give you 10% off. That would be considered a hard inquiry. A soft inquiry are when companies want to send out promotional information to a pre-qualified group. So my little Macy's example before, where they're contacting the credit bureau and they're saying, hey, give me information about all these people who live in this zip code and have this income and have this credit score, that would be considered a soft inquiry. So hard inquiries can impact your credit score a little bit, and soft inquiries don't impact your credit score, maybe 5 points, not a lot. But soft inquiries and hard inquiries last on your report for a couple years. But the mathematical computation that Jessie mentioned earlier about how credit scores are created are pretty sophisticated, and they can tell the difference. And when they're calculating out is something a hard inquiry or soft inquiry when coming up with your credit score. So I will pass the ball then to Jessie, and he will continue on.
So the Consumer Financial Protection Bureau, or now it's called the Bureau of Consumer Financial Protection, has a lot of great resources around credit reports and building better credit. Just a lot of information. This particular worksheet that they have here, or tool that they have here, is called the Credit Report Review Checklist. And if you wanted to obtain a copy of that, just type into your browser Credit Report Review Checklist, CFPB, and I'm sure it's going to come up as one of the top 1 or 2 links. And so it has a list of 18 questions that you should go through when you check your credit report. Now I'll go through a couple of those questions. I'm not going to go through all of them, but so for example, is your name correct? And then there's a checkbox on the right side, yes or no. Are your previous addresses they have listed for you correct? Is your marital status correct? Is there anything listed in public record information? Is that correct? Are zero balances recorded for debts discharged in bankruptcy? Are the accounts where you are an authorized user or joint owner listed? So that concept of joint ownership is also important too, because if you're a joint owner on an account, even though you may not be the one paying that, that will show up on your credit report. So the same as if you're a co-signer on a loan. So and again, that will show up on your credit report. So some of the other questions are any accounts listed more than once? Is old information still being reported? So again, there's 18 questions. You go through and check yes or no, and then it kind of goes on to tell you as well how to fix errors. So there's a dispute in that particular document, that credit report review checklist. There's a sample dispute letter, and it also has steps to filing a dispute. So, when there is something that's incorrect in there, the first thing you want to do is contact the creditor, try to understand what the problem was, contact the credit bureau, so whether that was Experian, Equifax, or TransUnion, contact them, and then try to get it sorted out. And again, there's a sample dispute letter in that resource by the CFPB. And what they tell you is if these people aren't responsive, now by law, the credit bureau has so many days to get back in touch with you after you file a complaint. But if they are unresponsive, you can contact the Consumer Financial Protection Bureau. What happens if there's fraud? So if someone has stolen your identity, what you need to do there is contact the credit bureaus and request that they place a fraud alert on your account. And basically, the fraud alert means they have to verify that you're actually the one that's requesting information, your credit report. And so that requires them to kind of verify any suspicious activity with the fraud alert. Now, the fraud alert's only good for a period of time, so it's not a permanent fix. And the one thing you need to be aware of with fraud alerts is, the people that are out there stealing identities also know how long a fraud alert is going to be on an account. So they will hold on to that information and wait till that fraud alert's lifted, and then they'll try to open accounts in your name. And I'm going to talk about some other steps here shortly that you can take to protect your identity. But so if you do, again, have your identity stolen, you should also file a report with the police and also with the Federal Trade Commission. So here, this is that more detailed information that I was telling you about. So there's three kind of types of alerts. You have a fraud alert, which is free of charge. If you think someone's stolen your account, you put that fraud alert on. And again, the good thing is it's free, and then it kind of people have to verify that it's you when you're getting their credit report. The credit freeze is like the next step up. So it's also free of charge with current law. In the past it hasn't been free of charge, but it is free of charge now. And the credit freeze keeps people from being able to pull your information. So if I have a credit freeze on my account and I go to open a credit card, that credit card company is going to request the credit report. Well, the credit bureau won't send that credit report as long as there's a credit freeze on the account. And so the good part about a credit freeze, again, it's a step above the fraud alert. It prevents people from getting access to your information, so it would prevent someone from opening an account. The kind of the downside of it is once the freeze is on there, if you're going to open an account, so if you're going to take out a loan or open a bank account, any of those places where you might need to have access to that information, you're going to have to do what they call stall your account. So when you set up the freeze, you'll have some kind of PIN code, and so that if you need to call back and unfreeze your account, you can do that. Or like I said, stall, the term you often hear is stall the account. So the credit freeze is something that you can put on your account, and it kind of locks it down. And then the third option that you see up there is the credit lock. That one's not free. That's offered by the credit bureaus, and again, it's very similar to the credit freeze, but they charge a monthly service fee to do that. So what I would suggest and recommend that, if you don't plan on opening any accounts in the near future, that the credit freeze would be your best option. So credit scores, we talked about this earlier. So FICO, that's the one that you hear most often, but there are several different types of FICO scores. So someone that does mortgages, they're looking at certain factors, and so there might be a FICO score. FICO, again, I would just use this fictitious term. They might use FICO score 7, where credit card companies might use FICO score 5. Right? They're very similar. They're just pulling little differences in how they get to their number, but they're going to be very similar. But your score essentially is on the scale, as you see on the screen. It can be as less than 500, and it goes up to about 850. And then where you fall on that scale kind of determines how good you are at repaying your debt, and therefore, as we mentioned earlier, that will determine what interest rate you may pay. So if you're watching television tonight, you may see a car dealers that say, we offer 0% interest. And then you go to that car dealership and you're filling out your loan application and you're starting to sign all your closing paperwork, and next thing you know, you might be like, wait a minute, this says I'm charged 4% interest. What happened to the 0%? Well, what happened is they ran your credit score. Credit score wasn't what met the criteria for the 0% interest rate. And so that's why it's really important, if you see an advertisement and it's advertising a certain interest rate, that's the interest rate that you're going to get when you sign the final document. Just don't assume that that's what you're going to get, because your interest rates are really going to be determined by your credit score. So I have a second video we're going to play for you. It's going to give you that snapshot of what makes up a credit report or a credit score.
Consider this. If you were lending to a friend, you want to make sure you'll get paid back. Probably wonder, have they paid their past debts off?
So that was a good understanding of the FICO score. And again, I'm not going to rehash this, but those 5 areas: payment history, amount owed, length of history, new credit, and types of credit used, all play into that FICO score. So the question I was asked earlier: how long are things on your report? So you can see here, this is just kind of a list. Credit inquiries will be 2 years. Most things are 7 years. A Chapter 7 bankruptcy will be 10 years. If accounts closed in good standing, it can be on there forever, but typically it's 10 years. And then we have lines through these. These are things that used to be on your credit report, but the credit bureaus are starting to move away from having that information because it was very difficult for them to verify. So, just think about how many Jessie Kellermans there are out there, or at least I think there's more than one out there. Who knows? I know there's at least one more because of my son. But, and so it was hard for them to verify if someone listed as just Jessie Kellerman has a civil judgment or has unpaid tax liens. So you're starting to see them pull that information off a report. So you may or may not see those areas, but for the most part, it's 7 years. Who can see your credit report? So these are just some examples: banks, collection agencies, creditors, employers, government agencies, insurance companies, landlords, utility companies. These people are, that can see it. Now, in some cases, you're going to need to sign a release report. So like an employer, your employer typically can't see your credit report unless you sign a release. Now, an insurance company, they, when you sign something up front, it may be in the paperwork that you sign and that they can check it. Banks, again, they're going to check. But these are all people that are interested in your credit report, and because they make decisions, whether it's offering you credit or whether it's whether someone wants to hire you, those are all factors that they look at in making a decision. So what do you do if you have bad credit? You need to kind of, if there are errors, correct those errors, work with the creditors, make arrangements. If you have a student loan default, you want to get it out of default. If you have old information, you want to delete that old information, explain. So you do have the opportunity to kind of provide a narrative. And I often see this in examples of where a couple is divorced, and so they may have, through the divorce, one person was supposed to pay on an account and they weren't paying it. And that account, because you both signed saying you'd make sure it was paid back, is going to show up negatively on your credit report. And so having an explanation in there will help whoever's listening. You want to get a better idea of what happened there. Threats is on there. People, when you're working with collectors, they can't make threats to you. They can ask you for the money, but they can't threaten you. So you need to kind of be careful that you're not intimidated to make a bad decision, because when it comes to when money and times are tight and you got to decide which bills are most important to pay, you need to look at those secured items first. But if you're getting a threat from, say, a credit card company saying they want their money, well, paying your mortgage is more important than paying that credit card company. And so sometimes you have to kind of know what is most important for me to take care of. But the point being, just because you're being threatened, don't be intimidated by that. I kind of caution people around credit repair agencies, and the reason I do that is they're not doing anything that you can't do on your own. It just takes time and effort. You have to work with these people that you owe money with too, and work out what the problems are. Because sometimes what happens is when your finances are most difficult and tight, the last thing you need to do is pay someone else to do things that you can do for yourself. And so I kind of steer people away from credit repair agencies. So, coping with bad credit and rebuilding credit, they're very similar concepts. This is one of those resources that I mentioned that the CFPB has, and it's how to rebuild your credit report. But basically what you need to do is stabilize your situation, If you don't have any accounts or you don't have any way to pay on your accounts, you can establish a new account. Sometimes it's with what we call a secured credit card. So you're putting the money up front. It's used as the credit card. But if you don't pay it, the credit card company has that money that they can take. And so that's one way to do it. You just need to make sure that credit card company is reporting that to the credit bureaus and then explaining damaging items. So, but a good resource there is How to Rebuild Your Credit by the CFPB. And to improve your score, you need to start paying your bills on time, reduce your debt. You want to keep your balances low, and so the utilization rate that they look for is about 30%. And so if you have a credit card of $1,000, you want to try to limit your average usage on that to about $300. That's how you would maximize your credit score. Apply for and open new lines of credit only when you need them. So, holiday time comes and you apply for every credit card that's available. That's going to decrease your credit score, not increase it. And then always check your credit report for accuracy. We have a resource on here called powerpay.org, and if you have a lot of debt and you're trying to figure out how to manage that and which ones you should pay first, this is a good resource. You can input those figures in there that you have in terms of debt, and it'll help you kind of figure out which ones you should pay off first and help create that kind of snowball effect to get yourself out of debt. And I think, Maria, you've used this a little more than I have, so if you have anything else to add about PowerPay, feel free to do so. But if not, I'm going to kind of move on.
I love it. I use this a lot for myself to try and figure out how am I going to pay my debts down more quickly. It will actually, once you put your information in, if you say you're going to get a tax refund and you want to use it strategically to help pay off debt, you can put in an extra one-time payment like that, whatever that is, a bunch of money from a tax refund, or if you find an extra $50 in your monthly check, and you want to apply that to, it helps you strategically figure out where should I put it and when should I apply it. And then it will spit out a calendar for you. So it'll list all the debts that you put in there, and it'll tell you this is how much you need to pay each month. So it really helps you figure out how to best, it's like the fastest, cheapest way to pay down your debt. I love it. So I'll stop there.
There you go.
Questions, I'll be happy to answer it.
So you also need to look at your credit report as a form of identity protection. So as we mentioned earlier, you can request those annually. From an identity protection point of view, you kind of want to stagger those. So you might request one in March, one in July, one in October. When you first check your credit reports, you might want to pull them all at one time just to look at all three of them. But after that, staggering is a good way to do that. And anytime you're about to go apply for a mortgage or take out a loan, you might want to pull your credit report just to make sure that everything is in check and that you can get the highest possible score and address any kind of negative things that may be on your credit report. Now, how long does it take to improve your credit report? That does take time. I mean, you can't fix things.
So I think we lost Jessie there for a second. So I'm just going to pick up. And so certainly checking your credit reports is a great way to be sure that the information is correct. Doing it on more than once a year and kind of throughout the year, you can really keep an eye on it and make sure that there's no theft going on, identity theft going on. And you certainly, as Jessie started to say, you want to be able to shop for that. Check and improve your credit report if you can before you go shopping for a mortgage or other large investment. And then, as I mentioned earlier, you might want to, if you've never looked at your reports before, look at all three of them at once, fix them, and then afterwards maybe stagger them throughout the year. One, do the Experian at the beginning of the year, the TransUnion in the middle of the year, and the Equifax sometime in the fall. And just put it on the calendar and make it happen. It doesn't have to be hard. So, I don't think I can advance. So Taylor, can you take the ball back from Jessie and help me out here?
Yes, I just advanced the slide. Is that where you like to be?
So there are some protections out there called the Fair Credit Reporting Act, and so there are some things out there that really protect consumers. And so they, for example, agencies or lending companies cannot report outdated negative information. And so that is a protection. The access to the file is limited. As Jessie was saying earlier, only people who kind of have the fiscal authority to be able to look at reports are allowed to look at reports. And so that would be a lender where you filled out an application, credit application. It could be someone who is an authorized lender, but it can't be, for example, like your neighbor, right? They need to have a real reason to be accessing a credit report file. For employers to access your credit, you have to give them consent. And when might they do that? Well, especially if it might be a position where you're in charge of or accessing or auditing money, for example. They're going to look at your report to see whether or not you might be in a place where you may or may not be around money, right? Because they're worried about their finances. You can pre-screen. You can limit your pre-screen of offers to credit and insurance, and part of that is putting a freeze or a fraud alert on your account through the credit bureaus. You can seek damages from violators. And so what does that mean? Well, let's just say there's a debt collector who is like driving you crazy and is calling you morning, noon, and night, and at all times of the day. And so there are rules about how often and when they can contact you, and so you can seek damages against them. And then victims of identity theft and regular folks as well as military have additional rights. And so those are some of the I'll just see benefits of the Fair Credit Reporting Act. Okay, so this is where...
Maria, there's a few questions, if you're ready for those.
Okay.
Somebody asked, who do you write to ask to delete old information?
So to delete old information, the first best step is really to connect with the credit reporting agency. Because the general rule is data can only be kept on the report for 7 years. Unless it's bankruptcy, and then would it be 10 years? If those number of years have expired, you can contact the credit bureau and say that of the file that has the information and say, please eliminate information that is older than 7 or 10 years. Now, the catch to that is if the lender actually considers the account still open, still active and open, then the credit bureau will not be able to do that. But if the account has actually been closed, then they should be able to eliminate that information off of the credit report. The other way to do it would be to contact the credit grantor directly. So, for example, I had a situation where I had paid off my Sears credit card, but on my credit report it showed that I still owed a balance. So the credit bureau wrote me back and said, sorry, we need to investigate this a little bit more. We suggest you contact Sears. So I contacted Sears and I said, hey, you haven't updated the information. I have paid this off. And they checked their data, and sure enough, I had paid off that credit card. And so then they updated the information that Sears sent to the credit bureau. So that's another way. There's sort of two avenues we have that can help us eliminate bad information on our accounts. Was there a different question?
There's more on the board. I don't know if you... Go ahead, Jesse. I'm sorry.
I said, yeah, I am back. I called it on my cell phone. I'm not sure what happened with the internet here.
Well, welcome back. I'm not sure what happened either, but Maria did take over, so we left off on the next slide after this one.
So I see Pam asked the question, how long does it take to fix your credit report? So some of it depends on how messy it is. I'll just put it that way, right? So if it's something as simple as, oh gosh, you have me living at the wrong address, that would be a matter of you contacting the credit bureau and saying, hey, this is my current address. They'll update it and you're good to go. If it's something that might take a little bit more investigation, that you might have to do a little work to contact the credit grantor themselves, or show proof that you have paid something off, or that it's different than what the credit bureau statement is saying, or the credit report is saying, then some of that may take a little time and effort to find the documentation to show the proof of what you're trying to make happen. And here's a question about, what if you're being harassed by creditors at odd and all time for a person you don't even know? Oh my gosh. More than 6 months of calls for someone with the same last name as us. Oh goodness. So I think you just need to stand firm and say, this isn't us, especially you have, kind of a common name. But I would also try to go to your credit report and make sure that your information is correct, because clearly that debt that the debt collector is trying to collect has come from somewhere. Their information has come from somewhere, and hopefully it is not coming from your credit report. So you want to make sure that that's correct. The other thing you can certainly do is within your rights to write to that debt collector and say, please do not contact me anymore. So next time they call, get name and address, whether you can send a letter, speak to a manager, right? Get that name and address, and then write a letter that says, cease and desist. I am not the person that you say I am, and please don't contact me anymore. So what that will do is force them to contact you only in writing. And typically, if it's a debt collector, what they'll end up doing is reselling the debt. So they got your name from somewhere, right? Maybe, or they got your address, right, or your phone number from somewhere, trying to track down this other person's information. So best you can do is put it in writing. And if they still don't, I would call a lawyer.
The CFPB also has an ombudsman, so you could call them and see if they can help you work through that as well if it continues to happen.
That's a great suggestion, too. Okay, let's see, were there other questions? Ta-da.
So while Maria's checking for other questions, those of you that completed the pre-survey, if you could kind of go back and answer the post-survey, there's about 5 questions there. Would appreciate that. I know we're a little after 1, so some people might be signing off. But we do appreciate your time today as Maria checks for additional questions. And I think I'll share that Shannon, I think, talks about the upcoming webinars, right, Shannon? Or Taylor?
Yeah, it's Taylor. Yeah, so this is the lineup for the rest of the year because it's holiday season quickly approaching. Something I don't have on there is the save the date for the Women in Ag Conference, which is scheduled for February 13th, with the pre-conference being on the 12th, and that is again at Dover Downs in Dover, Delaware, at the Hotel and Casino. That's always a great turnout. This year is the 19th annual Women in Ag Conference. We're very excited. And then we're gearing up for a few Annie's projects, I think, over the winter months. So that'll be good. I'm going to give everyone a couple more minutes to get last-minute questions in while we have Maria and Jessie's attention.
So to limit pre-screened offers, the best thing you can do is contact the opt-out. There's an opt-out phone number, and I don't have it in front of me. But the hard part is once your information is out there and your number's out there, these companies are sharing it with each other. So even if you called the opt-out, the government opt-out number, you still can get calls because, again, your information's out there. And that's one of the you can talk about all the good sides of the internet, but one of the bad sides is once information is out there, it's kind of getting passed along.
And I do have one question that was sent privately. To limit pre-screened offers of credit and insurance, is a credit freeze or a fraud alert better? I'm not sure if you already answered that one.
Curious what Maria's answer is. I don't know that you can limit the pre-screened offers because what has happened is there's pre-screened offers. These companies are buying information from the credit bureaus. So you'd have to check to see. The credit bureaus might offer some type of product, but they would charge you for it. But I think the best thing you can do there is that opt-out. Search for the opt-out number that the federal government has there. I don't know, Maria, do you have any other suggestions there?
I put the donotcall.gov website in the chat.
There you go.
One that helps to limit those phone calls.
Right.
I'm pretty sure that when you do a freeze or a fraud alert, you come off the list of that is sold to credit grantors. Pretty sure. I would have to, double check, but I
think that's all the questions we had on the board. I think that was a great webinar. That was a lot of information. Lots of things to keep you straight with your credit score.
And I don't know. No, I tried to put back up the original slide. Did that show back up, or is my internet still disconnected?
Nope, you're good.
Yep, the original slide's back up.
Okay. Yeah.
Well, thank you very much, Jessie. Anna, your question about the Women in Ag Conference in February, good idea to make hotel reservations now. Not quite. We'll have a room block or a discount code for the group as it approaches. So within the next month, keep a lookout for some information and save the dates on that, and it will include the group code for booking hotel rooms.
And can you tell us the dates again for that?
Yeah, so the conference is on the 13th. I believe that's a Thursday. And then the pre-conference is on the 12th.
Okay.
And that starts at noon to 5. There's 2 tracks. And then the conference is all day on Thursday the 13th. All right. Thank you, Maria. Thank you, Jessie. That was great.
Thank you.
All right, everyone. Have a good day. I'm going to go ahead and log off unless there's anything else you two need.
Nope.